You're watching Buy Now, Sell Now on ET Now, and let's get going with your queries. We have first queries from the YouTube. This is from Manas Gore. He's saying that he's bought Eicher Motors at an average price of 2,256 rupees per share, and he's been holding since September 2020. He's interested in holding this particular counter for a longer term and accumulating more as well. So he wants to know whether this is the right price to go ahead and add a few more stocks. Ashish, I'll come to you with this particular query on Eicher Motors. Last 1 month has not been that great for this particular counter, and given that the COVID wave, second wave of COVID has come back very strongly, is definitely going to hurt the auto demand as well. So how is this particular counter poised, and also does it make sense to accumulate right now for a longer term?
See, overall the auto stocks, if you look at it, since past 1 year, the auto stocks have actually performed well. We can clearly see same thing in Eicher Motors. It formed a low somewhere in the zone of 1300. From there, we saw a move towards that 3000 mark, and then we are seeing some kind of a retracement. So if the time horizon is from medium to long term, then I would suggest that yes, this stock can be accumulated even at current levels. There is more potential, and I think the overall auto sector can slowly and steadily start outperforming, because if these stocks can do well in this kind of challenging times of COVID, then I'm sure that these stocks will outperform. So as far as Eicher Motors is concerned, yes, we have seen some kind of a correction over very short term from 2700. The stock is now at 2350, but I think it should manage to protect that level of around 2000. So keep that 2000 as a stop loss. And I am expecting the stock will eventually start outperforming. So I'm not expecting it to do it immediately, but slowly and steadily there can be more accumulation happening as long as that 2000 level is protected. Use these dips as a buying opportunity, and we should see the stock eventually moving above 3000. But you have to stretch your time horizon at least from 6 months to 1 year.
Fair enough. All right, that's a fair call on Eicher Motors. Sudha has got a question, and this one's for you, Sharmila, on Titagarh Wagons. She says that she's bought at price of 90 in 2018, and the price is half of that, nearly 47, and she's losing significant ground. What she's essentially asking is, should she average and hold on to this stock, or should she book losses and move to something else?
Is in railway wagons, the railway wagon space, and the current situation is obviously not the best situation for a stock like that. So if you are expecting that that you will be invested in it long term enough for things to sort of go back to normal, and then demand to start increasing for their products, then it's a different thing. But my advice really would be to exit the stock, because we are in a market where there is an opportunity cost involved in staying in stocks or sectors which may not really kind of participate in the rally as much as some of the other sectors. So I've said it often enough that my favorite sectors are IT and pharma. So I would request you to shift your position to one of these, and you'll probably have a better chance of making up your loss rather than staying invested in Titagarh.
All right, the next query is coming in from Shivakumar on Nazara Technology. He wants to know whether it's a good buy for a long-term investment. Sharmila, what's your take on Nazara Technology? Recent listing, does it make sense to buy for long-term?
Well, I would really hold on for now, because I think that we are going through a phase where a lot of these new listings, they are sort of reacting along with the market moves, and they are getting sort of caught up in this sort of sell-off. So I would really think that it's not a good idea to buy right now, but probably wait for a month and a half before you think of buying Nazara.
All right, let's also address the fact that we had a discussion about Tata Steel, and a number of you asking about Tata Steel BSL, as well as Tata Steel Long Products. Both of our experts had the view that Tata Steel is the counter that they would prefer, because it would be more resilient in the event of a turn in the cycle. Now, I want to address, if you have a view on this, I'll come to you. On the technical side, just a view on NIIT, and we had this question yesterday also, I believe. The question is whether to stay. So it was bought at levels of around 200, and should they hold on to the stock? This is from Akash.
The overall trend for NIT had been positive, but it's a very volatile stock. You can see a jump from 140 to 190 in just 2 days of time, and post that we are again seeing some kind of a down move. So I would rather prefer something like Tata Elxsi, which has been in a constant secular uptrend, and we have seen a very strong outperformance compared to NIT. So in case he's comfortable getting out of the stock and parking into Tata Elxsi, that is much preferred choice. From the technical level perspective, if one wants to still hold on to to NIT, he can use a stop loss of around 160 on the downside, and then expect it to go towards around 190 to 195 levels. He can hold on to this stock, but the preference will be towards Tata Elxsi if that is possible to be shifted from this stock.
Next query is coming in from Shubh Mathur on Imami. He has a short-term target of 550 rupees per share. What's your view on this particular counter, Ashish? And what about the target price that Shubh has mentioned?
Yes, see, Imami has been again a good stock, outperforming. It has managed to protect its moving average of, if you look at the around 50 days average, it is managing to protect that. The speed is not that strong. It has been slowly reducing the speed, which we can measure by looking at the momentum indicators. There is some kind of divergence, but nevertheless, I think 550 is a doable target that's achievable over short term. So he can maintain that target and hold on to this stock on the downside, but he has to play with a very fixed stop loss. So maintain a stop loss of around 490. As long as that level is protected, which is just below a 21-day average. So if that level is protected, I think the stock can reach towards that target of 550 he is maintaining. So hold on to the stock for now.
Okay, this is a very interesting question. All right, Sharmila, and I think it's pertinent for quite a few of the large cap counters that have gained significant ground in the recent past. The question is from Parth Shah on a strategy from the perspective of strategy. Can you ignore, or can I ignore, the price to earnings ratio of a company if I find that the company is attractive on other grounds?
Should I take that?
Yes, please.
Yeah, okay. Very interesting, because I think that we are living in a time where PE is something that the market doesn't seem to be really looking at too closely, given the kind of valuation we are seeing on some of the stocks. So I think, yes, clearly the current mood seems to indicate that you should be looking beyond PE. You should be looking at what could happen in the year going ahead, and where, post-COVID, where the demand could come, or even during COVID, where the demand could come. And there is another theory about China +1. So, these are the kind of strategies market is working with. And if you want to be part of that trend, then I don't think that PE should be such a big consideration for various reasons. I mean, you are expecting earnings to improve going ahead. You are expecting demand to come from certain different reasons, for various different reasons. So those are all things that you need to take into account. Like, for instance, pharma is coming out of a very long period where things were going against them. Now those things have fallen into place. Plus, there seems to be an indication that because we are low-cost producers, we could be participating much more in a whole lot of medicines, not just vaccines, but in a whole lot of medicines required for COVID, etc. So there is definitely an opportunity there, and therefore, PE may not be the only way to look at it, because their earnings are going to improve going ahead. So there could be various things like that, but I would broadly agree that this current market situation does seem to be one where PE cannot be your only consideration for making an investment.
All right. The next query is coming in from Sudhir Sahu, who wants to know about on mobile. What should he do? Is it a buy candidate or a sell candidate? And I'll come to you, Sharmila, with this question on mobile. If you see in the last 1 year, the stock has just zoomed. At 312% in the last 52 weeks. That's the stock gain coming in. But fundamentally, does it make sense to invest in this particular counter right now, or should the investor wait for some more time?
It warrants a wait, but this is again one of those classic plays where you're looking at a stock where you're not really looking at the earnings or the P that it is bringing, but you're looking at things beyond that, and what it could mean for the sector the company is in, and how things could pan out for them going ahead. So people are being a little optimistic about how things could pan out for the stock. But I think in this recent sell-off that we are seeing, it probably makes a little better sense to hold on for now. So I wouldn't really recommend a buy at this price.
Okay, I'm going to have to request both of you to keep your answers a little shorter because we've just been flooded by questions on social media. And thank you all of you who've tuned in live. We're going to try and take as many questions as possible. I'm going to start with a question from Miss Kumari on JK Tyre, bought at levels of 130. And this one's for you, Ashish. What is the outlook for the next 6 months or so?
I would say JK Tyre looks like short-term correction, but from 6 months perspective, there is a possibility we can get towards that cost price and maybe beyond. So hold on to the stock, use 100 as a stop loss on the downside, maintain strict stop loss, and then eventually if the stock manages to cross 115, we can expect it to go beyond 130 levels.
All right, our next query is coming from Saeed Imad, and this is on Vodafone Idea, caveat, a stock which is very volatile and based on news, ideally should be avoided to invest in. But I'll take this query of Saeed. He's bought Vodafone Idea 5,000 shares at 11 rupees 74 paise. He's currently in loss. He wants to know the views. Sharmila, I'll come to you on Vodafone Idea. A lot of news flows on this particular counter. We know what is happening with the company as well. Does it make sense to continue to remain invested in this particular counter?
This is a classic case of where PE is not something that obviously the investor there has looked at before buying. So here I think the whole play is whether they'll be able to repay their debt, whether they'll be able to participate in the increased use of internet, and because really speaking, mobile phones is no longer about just using it as a phone, but it's more on the amount of internet people are using, etc. So I would say stay invested for now because they have managed to repay some part of their debt and they seem to be getting out of the woods. So it warrants a hold at this point in time.
So there's a clarification, Sharmila, and you can give me a very quick view on this. This is from Akash itself. He's asking about Shipping Corporation and IDBI Bank both, and these are apparently divestment candidates. So would you buy them in anticipation of that?
Very honestly, that's not a strategy I like, and Shipping Corporation definitely is not a business that I have recommended. I'm sorry I didn't get the other name. IDBI Bank. I think among the PSU banks, probably SBI is the only bank that I like. So I'll just leave it at that. I wouldn't really recommend an investment in either.
All right, the next query is coming in from Pranav Dangi. He's bought Arvind Fashions, 1,100 shares at the price of 160 rupees per share. He wants to know whether he should average it further. Ashish, what's your view on Arvind Fashions?
See, I would suggest him to be avoiding any stocks, group stocks with respect to Arvind Fashions, because these stocks have not given any kind of return to the investors, and rather they have drastically underperformed over the brief period of time. And in the current situation, I don't see it doing much even now. So it's best to be getting out of this stock. If you want to invest into still some kind of a textile company, then I would prefer something like Century Textile, which at least have some kind of a very strong base. So prefer Century Textile over this one.
Coming back to you, Ashish, on this one, we've got Sahil Mathur asking about Oracle Financial Services Software. Bought it at levels of 3,233, which is not too far away from where the stock price is right now. What is the outlook in the near term?
Well, Financials is actually consolidating over past many months. So this consolidation phase should get over and we should start seeing a breakout out of this stock. Given that the entire sector is breaking out on the upside, I'm assuming that there is going to be a positive breakout. So hold on to this stock. Don't lose patience at this point of time. We can expect it to move beyond 3,500 and eventually head towards 38 or 3,900 levels. So hold on to this stock. Maintain a stop loss of around 3,150 on this stock over short term.
All right, the next query is coming from Diti. Is saying that bought Dishman Carbogens at 160 rupees per share. Can I average this stock? What will be the target price and time period for this particular counter? Ashish, would you like to take this one, this particular query on Dishman Carbogen? Buying price is 160 rupees per share.
Yes, see, this stock was in downtrend from 210 levels and made a low near around 110. That's like a 50% correction. Of exact 50% Fibonacci retracement is what we saw in this stock, from where it's bouncing back now again with a very sharp price. So yes, you can buy this stock, but don't average it now because it's very near to your cost anyways. Keep riding this stock, maintain a stop of 140. I'm expecting that this can be the fifth wave and can result into an up move back towards that 200 mark. Provided that the broader market continues to stabilize, and so one can expect it to go towards 200, maintain 140 as a stop loss. Maybe if it goes towards 180 levels, you can do some kind of a partial profit booking.
All right, coming to you, Sharmila. Parth Nagpara has bought IndusInd Bank. It's been weak in the recent past. He bought it at levels of 947 with a long-term view. Would you say that he should hold on?
Bank that you can hold on to, and there are obviously some near-term concerns because of this interest on interest and etc. So all those things need to be sorted out, and the NPA picture etc. needs to be will get clearer over the next 2 months. But this is a stock that I like, so I think he can hold on.
All right, there's a Twitter query that we've got from Milton Lobo saying that he's holding Anthony Waste at 357.75 rupees per share. He wants to know whether can he expect some more correction to come into this particular counter so that he can add more stock, or does it look stable from here on? And also he's holding Tata Power at 95.4 rupees per share. He wants to know what's the expected target price with a 1-year time horizon. Ashish, first we'll take on Anthony Waste. How are the charts looking for this particular counter? Some more correction in the offing, or has it stabilized?
See, this counter has shown a pullback from the 240 levels mark and managed to bounce back from there. So there is a possibility we can see some kind of stability, but keep in mind this has formed a lower high, lower low continuously. So he has to be okay with that if he does not get the desired outcome, which is the uptrend. For now, we maintain a stop loss of 270, and if it breaks 270, then get out of this stock, and then on the upside, we can expect it to go towards that 310 levels. So 270 is the SL, 310 is the target that he can maintain for this stock right now.
All right, Santi, I'm coming back to you. Ashish, I'm coming back to you on a question from Santi. This is on Sun TV. And this is a bit of an involved question, so I'm going to read it out very quickly. He thinks that the stock is bearish, trading below all averages and nearer to 461, which is the 200-day moving average, with good support at 450. This is his interpretation. He's asking whether you would buy for the short or medium or long term. What is the view here?
I would first like to congratulate him for such a brilliant interpretation. He is very much right. 450 is the level from where we saw the stock bouncing back multiple times. And it is trading below the average. So there is a contradiction. I would say it's above the support but below the average. So it's moving between the support and resistance levels. I would not do anything right now. If it breaks 450, then we are headed much lower in this stock. So wait for that. Or if it breaks back above that 480 mark, then there is a possibility of a positive breakout. So this is a triangle pattern. Wait for which direction it breaks out. So buy above 480 or sell below 450. That should be the strategy you can look at on the chart.
All right, and that was the last query for the day. Thank you, Ashish, as well as Sharmila, for waiting by and resolving all the viewer queries, sharing your views on Tata Steel and subsidiaries, and also giving your high-risk and low-risk ideas. And for all of our viewers, do tune in on Monday at 11:20 a.m. live on YouTube, Twitter, as well as Facebook to post your queries so that we can answer them live as well. But on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side. Don't go anywhere.
Co-powered by Century Ply, आग से बचाए.